Hey, what's up, everyone? I risked $100 on one single trade, and in just 30 days, I turned it into $1,000. Sounds crazy, right? But it's real, and today I'm breaking down exactly how I did it, from entry rules to risk management, to my exit strategy and the lessons I learned along the way. If you've ever wanted to trade Bitcoin, or crypto in general, you need to watch this until the end, because I'm sharing everything step by step. And if you stick around, I'll even show the exact chart that made this trade a winner in part 2. Quick teaser visual, screenshot of $100 gives, $1,000 chart with a big arrow. So, first, let me set the stage. I had $100, which honestly isn't much when you're trading Bitcoin. Prices can move hundreds, even thousands of dollars in a day. Most people think you need thousands of dollars to trade, but that's not true. You just need a plan, discipline, and proper risk management. I noticed Bitcoin was showing a very specific setup on the chart. The indicators lined up, the trend was clear, and the timing was perfect. I knew I couldn't just hop in and hope. I had to have a rule-based approach, something repeatable, something that doesn't rely on luck. Step 1 is always identifying entry signals. For this trade, I looked at 3 things. First, trend confirmation. Bitcoin was in a confirmed uptrend, and I only trade in the direction of the trend. Fighting the trend is the fastest way to lose money. Second, I looked at support and resistance levels, waiting for the price to bounce off a strong support zone. This reduced the chance of a sudden reversal. And third, I used a combination of RSI and EMA to confirm momentum. RSI was bouncing from oversold territory, and the 20 EMA crossed above the 50 EMA, a classic bullish setup. Once all 3 conditions aligned, I knew it was time to enter. But here's the thing. I didn't go all in. This is where most beginners fail. Risk management is the secret sauce that allowed me to turn $100 into $1,000 without blowing up my account. I risked 2% of my capital per trade. On $100, that's just $2. Some of you might think, $2? That's nothing. But small, consistent risks compound over time. I also used position sizing to make sure that even if Bitcoin moved against me, but small, consistent risks compound over against me. I also used position sizing to make coin moved against me, to make sure that even if Bitcoin moved against me, I wouldn't panic. I could sleep at night knowing I wasn't going to lose everything in a single candle, and I didn't chase the trade. Waiting for confirmation sometimes means missing the initial move. But it's worth it because it reduces emotional mistakes, the #1 killer for traders. Once I entered the trade, it wasn't just about sitting and watching the price. I actively managed it. I set a stop loss just below the support zone to limit losses. I also took out a small portion of my profit as the price moved up, locking in gains and reducing stress. For the remaining position, I used a trailing stop to capture as much of the move as possible without giving back profit. This is where trading psychology comes in. You can't be greedy or fearful. The chart doesn't care about your emotions, but your account does. After 30 days, the trade hit my profit target and I closed it. Total? $100 gives $1,000. Here's what I learned: patience pays. Waiting for the right setup is better than forcing a trade. Discipline is key. Following your rules beats intuition almost every time. Risk small, think big. Your capital survives longer, letting compounding work. And finally, always take notes. I kept a trading journal where every mistake and win was recorded. That's how I refined my strategy. I also want to share what not to do. Chasing trades after missing the entry often leads to losses. Ignoring stop losses can wipe out your account. And trading based on hype or news alone without confirming with the chart is a recipe for disaster. Avoiding these mistakes made the difference between $100 lost and $1,000 gained. So, if you take one thing away from this video, it's this. Trading isn't about getting lucky. It's about strategy, risk management, and patience. The $100 gives $1,000 trade wasn't magic. It was following the rules and respecting the market. And if you do that consistently, small trades like this can grow into something much bigger. Hey, welcome back. In part 1, I shared how I turned $100 into $1,000 in 30 days with Bitcoin. Today, I'm going to show you the exact chart, the exact entry, the exact exit, and how I managed the trade step by step. If you want to trade like this, pay close attention. I'm revealing everything. No secrets held back. Quick teaser visual, full chart screenshot with entry. Stop loss and exit marked, so here's the chart I was looking at. This is Bitcoin's price action during that 30-day period. First thing I did was identify the trend. Notice how the price was forming higher lows and higher highs, confirming a strong uptrend. Next, I drew the support and resistance zones. The support zone here, highlight on chart, was tested 3 times in the previous weeks. Every time the price touched this area, it bounced back. That's a strong signal that buyers are stepping in. Zoom in animation on support zone, now the exact entry candle. I waited for a confirmation candle above the 20 EMA, which also aligned with the RSI bouncing from oversold territory. The candle closed above the EMA and volume increased. This is what I call a clean signal. At this point, I entered $100 into the trade, risking 2% of my capital. My stop loss was placed just below the support zone, about 2% below my entry price. That way, even if the trade failed, I only risked $2. Show visual of trade entry, stop loss, and position size on the chart. As the price moved up, I didn't just sit there. I used partial scaling. When the price reached the first target level, I sold 30% of my position to lock in profits. Then, I trailed my stop for the remaining 70%. Letting the trade run and maximize gains. Animation of partial sell and trailing. Stop moving up with price. Notice how the price tested the resistance zone a couple of times. This is where most traders panic or sell too early. I stayed calm and trusted my plan. Each time the price retraced, my stop loss protected me. And when the price bounced, I rode it further. By day 15, my account had grown by almost 300%, and by day 30, the trade hit my final profit target, turning $100 into $1,000. Show final profit on chart with highlighted entry and exit. Here's the key takeaway. This wasn't luck. It was a rule-based trade with proper risk management, patience, and the discipline to follow my plan. The chart told me when to enter, when to exit partially, and when to let profits run. Lessons from this exact trade. Wait for clean signals, don't enter on noise or hype, use support, resistance, and trend. Confirmation, price respects these levels. Risk. A small percentage per trade. Protect your capital first. Partial scaling plus trailing stops. Lock in profit while letting winners run. Stay calm under pressure. Don't let minor retracements scare you. Overlay lessons visually on screen while pointing to chart. Now, if you want to replicate this, the exact steps are: identify a strong trend, higher highs, higher lows, mark key support and resistance. Zones. Wait for a confirmation candle above EMA plus RSI. Bounce. Enter a position with proper risk 2% max. Set stop loss below support. Scale out partially at the first target. Trail the remaining stop to capture more. PROFITSATA advanced tip. If you want, I can make part 3, where I show my live screen, the exact indicators, and how I calculate position size for $100,
500 and 1000美元 trades.
This will take you step by step so you can practice it on a demo account first.